What's up, gang? We are back. So, we're going to have a good one today. I think something that I haven't done in quite a little bit of time is just do a big TA session. So, we're going to dive into a whole bunch of stuff. Obviously, we'll be talking Bitcoin, we'll be talking crypto. We'll also look at a few equities from a technical analysis standpoint, especially within the tech sector. And so, yeah, man, I think we're going to have a good one. And I think we've got a nice name for the group, and it's just going to be BFD gang, right? Butter from the Duck gang. That's what we're here to do. So yeah, appreciate y'all tuning in. Looking forward to just going over a few things and having a little bit of fun here as we start the week. Hope everybody's doing well. Before we get started, make sure you smash that like button, tap the subscribe if you guys haven't, and then let's get into it. Okay. So really quickly, let's put up a quick shout out. KK's in the chat. What's up? And got my guy Navin, he's here. So yeah, we got the usuals. Let's see if we can grow the group, guys. The whole point is so we can share this information with a plethora of people. So the more comments that you guys leave, the more that you continue to like the video. We can get what I said. We can get to that algorithm and get it working for us, right? And so as we start here, I'm looking forward to talking. So cool, Wade. What's up, man? Hope everything is well. Nice to see you. Let's see here. So yeah, I really think that this is going to be an interesting week. So we have a few things kind of popping off already. We got Elon kind of backtracking his thoughts on Twitter. So, we'll dive into that whole debacle, which I mean, from the get go, I thought that was a little bit weird, right? How he just randomly popped up and said, "Hey, I'm going to buy Twitter now." But so we'll talk a little bit about that, and we'll kind of go down the schedule of things that are going to be important to look out for. Like we were talking before about the CPI print that's going to be coming up on the 13th, but there's some other key dates that I think are also going to be important, more so for the equity side. But as we know, crypto also tracks with equities as well. So we'll be taking a look at that stuff too. But nonetheless, the main topic here is we're just going to get on the charts, guys. We're going to get on the charts, do a whole bunch of TA so we can get a real good idea of just where we're at and try to see, okay, well, what are we interested in? What do we want to wait on? And just kind of get an idea of where price could go in the short term and in the medium term. And so, cool. There we go. Let's go. Butter from the duck. Let's go. I like it. Like Hotto and Hotto. Yep. There we go. Yeah. So let me share my screen really quickly with you guys and we'll jump into this. So, like I said, one more time, hit that like button. Let's go ahead and get this video out to as many people as we can. That way we can grow this group. The goal is, I would say, by the end of the summer. So we got the rest of July and August. I would love to see if we can start having at least like 20 to 30 people on here live every single video. So we got some work to do, right? So tell your friends, tell your wife, tell your wife's boyfriend, tell anybody, right? Go ahead, hit that like and subscribe button, and let's get into it. All right. So as we jump in, I'll start with taking a look at something a little bit different. We're going to look at a heat map for the stock market. And so let's do this. Let's change this up just a little bit. We'll go here. Cool. And so we'll start here. So here on TradingView, we can take a look at just a general heat map. And as you guys can see, I've been popping around. I'm in a couple different locations this entire week. Here at a friend's office. And so, yeah, that's just what you got to do. When you're on the road, you just got to find a place that's going to make it work. But if this Wi-Fi is a little janky, we're just going to have to work through it, okay? So we kind of get this populating. So we got a red day today. And so I like coming over here to TradingView and looking at this as well, because typically we can see as this goes, so does crypto. And so see if we can get this to populate. 1 second, guys. Here we go. Cool. So, and I just think it's really important to get to know some of the larger companies that really drive the economy in the way that they do. And so, obviously, Microsoft and Google, they've always been a pretty big player, especially over the last 10 years. And so we have Amazon, Tesla's kind of up and new and up and coming, the past few years doing this thing. Berkshire Hathaway, the A shares and the B shares, obviously JP Morgan Chase. We got Apple. And so getting familiar with these companies are super important because it just gets you to understand, okay, when you go out in the real world, what are the use case of these companies? And you see that there's people doing a lot of this, I would say, they're doing things without realizing what they're utilizing. So they do things on their phone and they don't even realize that they're using Google probably every day, right? I mean, people realize what they're doing with Amazon and then Tesla, right? People, hey, they believe in what Tesla is doing, especially long term. And so obviously Apple is obviously important, right? Because I would say probably 60 to 70% of people's phones are is an Apple iPhone. So as we continue to dive in, and my thing is just presenting value and understanding. And then so as we look in deeper into each one of these sectors, and I mean, there's literally hundreds, if not thousands of these companies. Look at the big players in the space. Knowing the big players in each space is going to give you that mental edge. So when you see certain headlines, you can kind of connect some dots because as the big players go, especially in equities, that's kind of what we're going to see how crypto is going to start moving as the years go on. We're going to see the main players in crypto start to move how these larger players within equity start to move simply because of regulation is coming to crypto. Then so kind of getting ahead of the game, understanding, okay, well, what companies exist that are, fairly large, not only in size, but also in use case as well. So JP Morgan Chase, Bank of America, right? And then so Berkshire Hathaway. And this is Warren Buffett and his team, right? As they continue to collect assets and they diversify, they've built one of the most important financial stocks within, within the last, I would say 20, 30 years, right? And so they have been doing a great job building there. But yeah, as you kind of continue to look, you got TD Ameritrade, you got Charles Schwab. And so what do you notice? Many of these are banks, right? Wells Fargo. And this is the finance sector. So just knowing these names, right? And as we can see, it's just a red day. So within tech, who are the big players within tech? So understanding that Google, Microsoft, and Facebook got Adobe, Cisco, and Oracle, right? So if you just knew just these small batch of tech companies, you can get a good idea and get a good pulse on, okay, if I were to just kind of pay attention to these five companies, you'd have a good idea of where the sector is going. How are they developing? What are they doing? What are they adding? What are they subtracting to their business models? And how are they generating revenue? IBM, right? Intuit, and so understanding these companies, and all it is just a quick 5 minute Google. Take a few notes, and you'll get a chance to understand a broad idea of what they do. And so let's see here. Let's continue down, and let's look at the health industry. And then so as we look at the health industry as a whole, let's do this and just ask yourself: do any of these names ring a bell? Right? Pfizer, J&J, that's Johnson and Johnson, right? And even myself, I have to spruce myself up on some of these other companies as well that are larger. And then so it looks like health is a little bit in the green today. Nothing crazy, but they're in the green. And then so this one kind of piqued my interest because I've never heard of them. So this is, and I'm curious if you guys know about this company here. That would be great. Put the info in the chat and we could all learn. But it looks like they're in health technology. And let's see here. Da, 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 da. And so obviously pharmaceuticals and diagnostics. Gotcha. So I'm assuming they are probably along the line with Pfizer and J&J. All right. And so I think that's always important. Y'all can go through and dive in. Don't want to spend too much time on that, but y'all can go in and dive in. And all you got to do is go to tradingview.com. It's just a stock heat map. And then normally what I do in the morning, I'll check the crypto heat map, I'll check the stock heat map and see if there's any difference between the two. Typically, there's not. And so, but at the same time, I do want to keep track, and I hope you guys kind of want to keep track of, hey, what's doing well during this time? Because as time goes on, you can help yourself in the future learn how to pivot and say, oh, okay, well, I remember when crypto was down, what was maybe doing a little bit better. And then those are indicators to kind of see, okay, well, maybe if we're in a bull market, for example, and we see these other sectors maybe not doing so good and they start to randomly do pretty good, that's liquidity going from one sector to another. And then so that may be a early indicator for you to say, hey, I want to check my crypto holdings and see if I want to make any adjustments, solely because we know of all of the other players within not just the crypto space, but the equity space, because as we can see, they are tied together. And so, yeah, tradingview.com, use the stock heat map is really cool for that. And so another thing that I want to briefly talk about is some of the things on the calendar coming up here, especially this next week. And sorry for the Wi-Fi, guys. It's a little janky in this office, but I think we're going to get this together here. So let's see here. So as of today is July 11th. And nothing too crazy today. All right. So we have the 3-year inflation expectation. That one was not so much important as what people are paying attention to. The big one that we all want to pay attention to, and this will be 8:30 a.m. And that's going to be the consumer price index. So on the monthly. And so this one, and then so the monthly, they have the year over year, which is what people pay attention to the most. And so as we can see, right, we have a forecast, and that's been the whole thing of seeing, hey, are we going to be going up, right, with inflation, or is it going to be the same, or is it going to taper off? And from all the estimations and all the forecasts, we've basically been able to come up with the idea, and we'll confirm it on Wednesday, that things will basically be either a level, basically saying inflation has not gone down, or b the latter, which is a little bit worse, that inflation has actually gone up a few ticks compared to where we were last month. And so that's what we'll just have to prepare for. So if we have that news where inflation is higher, I would expect some prices and asset values to be going down, simply because the market is trying to price in the data as it gets received. And so that's a thing to be on the lookout for. And then also, one thing that a lot of people really don't pay attention to, that I've been starting to pay attention to, especially over the past 3 or 4 months, is looking at the federal budget. And so the thing is, the budget, especially for the Fed, they have a hard job of maintaining a balance sheet. And so having a certain amount of bonds in their portfolio. And so when these bonds mature, they can either renew them, right? Or they could sell them. There's a lot of different options. And then so what we've seen, just as this past month started, they start to actually really run off their balance sheet. But overall, checking the federal budget, seeing where they spend their money, where they holding back a little bit, is important. And so that's going to, and it's going to be in comparison on how that budget is compared to a year ago. So that's going to be coming out 2 p.m. on Wednesday, which that's going to be another thing to try to pay attention to. And so here's another thing, right? So on Thursday, believe it or not, this is also important. So jobs, because that's the other side of the Fed mandate. They need to, one, have price stability, worry about inflation, but they also need to, their goal is to keep a low unemployment rate. And then so getting an understanding of the initial jobless claims, that's going to be huge. And so that's going to be coming out on the 14th. And another one, believe it or not, which a lot of people don't pay attention to, that I think is pretty important, is the retail sales. And that'll be on the 15th at 8:30 a.m. And so month over month, we're going to see, okay, are retail sales doing better or are they doing worse? And so that just gives you an idea. If retail sales are doing worse, guess what? That means the average consumer, they're tightening up on their dollar. They're not spending as much. Hence, gives a little bit more credence to the narrative of a recession basically looming, or we may be in the middle of one. That information will be coming out later on the 26th and the 27th. And so, but I just want to give you a quick idea of what's coming up this week, a few days to pay attention to, a few things to pay attention to, because I think all of these things help us understand where things are going and help us become savvy investors and just be able to make good decisions, not just in the short term, but be able to piece this thing together for the long term. Because as we know, crypto is a long-term game. Just in general, investing is a long-term game, especially if you expect to do well with the lower risk rate of return, basically. So when you do things on the short term, you got to be really dialed in, and your risk essentially is higher because no one knows what's going to happen day to day, hour to hour. But what we can see is generally markets do trend up, especially when the economies of said markets are doing well during that time. And so, yeah, let's get into it. We're going to do a big deep dive into a BTC and Ethereum. We're going to go into some of these other alts. If you guys have any suggestions or any alts that you want to take a look at, you want me to take a look at in a second, I'm going to open it up for you guys to let me know. And it's kind of just going to be a request show as well here. So, really quickly, before that, let's kind of get this thing out the way with Elon because this is kind of the headline of the day as Elon basically says, I don't want nothing to do with it. Like he's done with trying to pursue this whole Twitter thing. And I was pretty skeptical at first, right? To be honest, because I was like, okay, this is very random. This guy who's doing stuff involving electric vehicles, obviously trying to go to the moon with SpaceX and that kind of technology. What is the use of a social media platform? Why I was trying to put in my head and try to fathom why the acquisition for Elon Musk and Tesla and all of his conglomerate of companies, why that would be beneficial for him long term. Because I believe that these guys think in long term scales as well. But we all know Elon's a little bit more impulsive than the average business owner and probably a little bit more impulsive than the average billionaire. But with that being said, this is interesting. It's kind of just throwing another layer of fluff into an already hard to understand situation with him and Twitter. And so, as we can see, according to the markets, the shares fell pretty heavily. So Twitter shares tumble after Elon Musk ended or tries to end $44 billion deal. And so, as we continue to read, uh, so we just read that report right there. So Musk's attorney informed Twitter last week that the Tesla CEO was terminating the deal to purchase the social media giant. Musk alleges that Twitter appears to have made false and misleading representations regarding the platform, particularly how it handles spam accounts. And that's just the biggest thing about Twitter. I don't know if everyone here uses it, but Twitter has been known to have a lot of spam accounts, a lot of fake accounts saying things that are trying to either promote fear or just things that are just misinformation. And so this is a problem I could see definitely as anyone that's trying to buy a company based upon revenue, buy a company based upon activity. And so that's hard when a lot of the activity is fake, not from real native users. And so maybe $44 billion is much more than maybe what Twitter's worth. Maybe it's worth a third of that or half of that. Nobody can know. And I think that's what he's trying to get at is, when you have these metrics and you're giving this information, trying to value your company at a certain price level, but you have things that are illegitimate within the operations, or not so much within the operations, but more so with the outcome of what's projected out there as far as their user base and activity. And so, there I would say there's a little bit of credence to why he would maybe not want to do the deal in this way, but for him to pull out completely, that is pretty interesting. And then so he says for nearly 2 months, Mr. Musk has sought the data and information necessary to make an independent assessment of the prevalence of fake or spam accounts on Twitter. And so, this is the biggest thing that he's worried about, it seems like. Now, he was pretty silent about this whole thing for some time. But, in the background, as these acquisitions happen and these companies get bought and sold, there's a lot of red tape, and so I know that there's a lot of people on Twitter's board that was giving Elon a tough time at the beginning because they're maybe thinking that he wasn't fit to lead Twitter in certain capacities, which that's subjective. I'm not going to really comment on that, but the biggest thing is that anytime that there's a large acquisition of a company that's going to go through, and then maybe it doesn't, there's a lot of liquidity that was either betting on the side of saying, hey, Twitter may be getting better here. And so I'm definitely seeing a sense of a shakeup because, anytime that you see a retraction of something that could potentially be pretty big, typically you see things happening underneath. And then so I don't know. I think for Elon, this may have just been a ploy to really do something else. So get people to pay attention to something over here while he's doing something else. I don't know. We'll find out within the next few months and definitely within 2022. But nonetheless, I would say, as the markets kind of head down, you'll see some memes out here too. So they said I couldn't buy Twitter, then they wouldn't disclose bot info. Now they want to force me to buy Twitter. And there you go. And so, this is pretty interesting. Let's see if we can get this full thing here. Oh, and this is Elon tweeting this. So this isn't somebody random. This is him making a meme of himself, which that's interesting. So we'll continue reading. Now they want to force me to buy Twitter in court. Now they have to disclose bot info in court. So, I mean, this may just be something to where he's just trying to, bring things to light in certain ways. But obviously, he's getting a kick out of it. And it is kind of funny, man, because as we know, a lot of these larger companies, they portray certain things, right? But underneath the hood, there's a lot of things that are false, right? And we've even seen that within crypto. Some of these country or companies that you think they're doing everything right. And especially, without certain regulations, them not disclosing everything in certain capacities, it's easy for people to be fooled. And so these examples are great for us to see and understand because it just solely gives us another layer of one, trying to make better decisions for ourselves, but then also just experience, right? The more you've experienced, the more savvy you'll be within the market. And then so seeing these different things it's pretty funny, but at the end of the day, it's really a learning lesson for everybody if you're really paying attention, right? On how these things work and not just from hey, I can buy this today and it'd be worth more later on, but just seeing how the ebbs and the flows work even between the acquisition of a company and the battles that are fought even when it comes to buying a company and how that has a effect on the market. And so it's pretty interesting. And so really quickly before I get started, let's kind of jump back in and see what the chat is talking about before we get going into the deep dive for the coins. Cool. We got JE in the house. What's up? So, really quickly, if you guys have whatever, it's a small group here today. So, if you guys have one or two coins that you want to take a look at, I'll definitely take a look. I know I have a batch of coins that I want to take a look at in particular. But if you have something that's on your mind, throw it in the chat and we could take a look at it on this deep dive. And so, this is going to be a very interesting week because I can already see it forming on the BTC chart. Let's see here. Cool. So on my list, I'll be looking at Bitcoin, Ethereum. We'll take a look at Phantom. What else do I want to look at? There's another coin called looks rare, and I may do one more. I think I'll probably do Thorchain, which is Rune. Karn, what's up? Nice to see you. BFD gang in the house. Cool. Okay. So Soul and ADA. I'll put those up. And if anybody has anything else while I'm going, just throw in the chat. But we'll start with Big Daddy Bitcoin. So let's get back to it. And then so I think we got Axie Infinity as well. AXS, right? Cool. So yeah, we'll look at those as well. So it's been pretty interesting. So let's just do big view, start from scratch type idea. And so we'll kind of clean this chart up here. We'll do that, and we'll take these parallel channels off for now. And we'll just leave the moving averages. And so same thing, narrative of the century up and to the right for BTC. Obviously with pullbacks, which dips are in the game. But same thing if you compare to any other asset class, BTC has outperformed exponentially, and that's why people want to get into crypto during certain times because the allure of making money quick has always been there. But nonetheless, people need to understand that the aspect of investing through time to really, really become an investor, not just a speculator. But obviously, with a trend line that looks like this, who wouldn't want to get a piece of this, right? And so let's change that from dotted to solid, and so up and to the right. And so, from peak to trough, you can take you can take any points. So let's say we want to take this point here and, let's just say from this bottom to that top, beautiful, nice 86x. Same thing here, this last bear market to the top, great return there. So you're sitting at right about a 20x. And then so through time, what do we see? And let's go back to the first cycle, bottom top. And these are just the rough estimates. And this is crazy. This is about a little bit more than the 420x. So as you can see, the multiples on your money are becoming less, but nonetheless, I would say price is, becoming a little bit more stable. And so people who are kind of just jumping into the game at this point, great opportunity, great entry point. So, for example, yeah, Bitcoin has did a nice retracement, and we retraced about 78% from this top. So we can move these out the way for now. So from the top, BTC has retraced a good amount all the way to where that bottom was, right? Was about 74%. And that's almost indicative to, what we've seen in previous bear markets. And the big thing is what people have to know and realize is that there is a difference between a 74% reduction and an 84% reduction. And so I would say just patience, right? We are in a value range of accumulation. Not I wouldn't say there's a like a beginner part to the accumulation, and there's that optimal accumulation range. We may not be in that optimal accumulation range as far as just getting the exact lows over like of a month or two or three, but I would say this is the beginning of what it looks like to enter in an accumulation range. And then, so you have to answer that question for yourself, right? To lower your cost basis, is 20K BTC a good point to do so? I know for a lot of people it is, especially if you were buying up when BTC was 60K, 55K. So, being able to accumulate a little bit more in the 20K range would still be a relatively good move, right? Now, for people that were accumulating at lower prices, no need to necessarily raise your cost basis if the overall market is trending down. And so that is a question that each individual person needs to ask themselves. And nonetheless, for me personally, I can say, BTC, Ethereum in that $1,000 range, BTC in that $20,000 range is a point where I'll nibble at the market. So I'm not really going crazy trying to throw all my cash, but hey, I'll nibble at the market at these price levels. And so I'm going to show you some of the on-chain data that also supports that reasoning as well. But nonetheless, we've had a nice pullback here. And then so if we want to take a closer look here, I've got a couple moving averages here, and these moving averages are going to be very helpful for us to understand kind of how things move with the market. And we'll take a look here a little bit closer. So if we look here in purple, we have the 200-week moving average. A lot of people talk about it. And so right here, it served as a nice support in the previous bear market. And there's a couple of weeks with COVID where we wicked below it, but we really didn't close below it for months at a time. And so this was an incredible buying opportunity for the people who are paying attention. Now look at where we are today. Now we are below this 200-week moving average. And this is, like I said, anytime that we've popped below this point, it's been pretty interesting. And so, like we're having several closes below it. And so the question is, okay, well, how relevant is this 200-week moving average? I'd say it's still pretty relevant because typically, even across any asset, especially when you're looking at equities, when prices go below their 200-week moving average, that is a big indicator of value, right? And that's just the thing of just being able to buy value, in my personal opinion, has always been a great idea. And so a lot of people would say anything that is above that 200-week moving average is definitely riskier. And then so from a risk perspective, your risk is, and just when I talk about risk, it's not so much about like, oh, the chance of you losing all your money. If you're buying good assets, I just mean risk in terms of volatility. The chance of volatility to the downside is severely decreased, especially when you're buying below this 200-week moving average. So as we can see, price typically spends much more of its lifetime above the 200-day moving average or 200-week moving average. And so as we, if we want to pop this on the monthly chart, and you can kind of see, even this is like, so this is kind of looking at the 21-month moving average, right? And then so we pop below that. But I think the best way to explain this will be back on the weekly. And let's see if we can try to get as much data as we can with this. But just understanding value is really what I want to start off with as we do a deep dive into understanding kind of where the market is at and this TA session. And then so as we can see, diminishing returns through time, but nonetheless still way better than any other asset class. So we can pop that off. But the biggest thing is, if we were to kind of extrapolate that, right, through time, and since we've been able to keep this metric, we've only really spent a few weeks below this 200-week moving average since 2015. And so with that being said, it's literally probably less than 1% of BTC's life since 2015 has been spent below the 200-week moving average. So if you just know just easy percentages and easy math, you can do the math on that and say, okay, well, it's been in this period 1% of the time, and 99% of the time it's been above this. So what do you think the chances are that you're going to do well with this investment through time by purchasing below this moving average? And so I'm going to leave that for you guys to think about. And it's just general numbers, right? So same thing here. These 3 points here, where you just have a little bit of time below it, majority of the time is spent above it. So that's not to say that we can't stay below it or go even lower below it, but nonetheless, just from a percentage standpoint, from historically, these are the times where you'd want to start to look to say, hey, I want to start accumulating coins on a discount. So something to think about. So now that we get the idea of the 200, let's take a look at, this other moving average that I have here. And so this one is used best on the daily. So we'll zoom in a little bit more. And so this orange line here is the 21-day EMA. And then so what do we normally see for the 21-day EMA? Typically, when we have a strong bull market and we know it's strong, we'll see majority of the price action be above the 21-day EMA. I'm not saying that it can't go below it, because we've seen it go below it, but typically we see the 21-day EMA serve as a support to where price bounces off of it through time. And so especially in a bull market, as you can see, bounce off of here, bounces again. Now, and so as you can see, if you look at the trajectory of this line, when things are going straight up, yeah, you got it correct, but nonetheless, it doesn't stay below it for that long. And so if you really start paying attention when things are pretty bullish, it may stay below it for 6, 7 days, 8 days most, but you'll see it get right back on top and use it as support until it finally breaks. And then what do you see? It serves as resistance for quite some time. Same thing here. This was a tricky period for a lot of people within crypto, because they didn't know if this was the start of a bear market or this was a wave 5 going even higher. This was a tricky point where we just kind of barely created a new high, and we've been in the bear market since. But same thing, right? Ever since this moment, and we want to really take a good look. So since we've come below this 21-day EMA, we use it as resistance, not just once, but twice, 3 times. Now we were saying, okay, well, hey, maybe that was just a little pullback, and we're going to go back higher. Well, this was a lot of sideways action to where we just threaded it back and forth. But nonetheless, what happened? We came back below it, and we've used that as resistance. 1, 2. Same thing here. I'd say this is a pretty strong resistance as well, because we cannot maintain it, right? So if we want to zoom in a little tighter, we cannot maintain and stay above that 21-day EMA for weeks at a time. Hence, we're still in bearish mode. Same thing here. We fell down, and where are we at today? So this is the interesting part, is where we broke through it. And if you guys remember, I had those two price calls, and I'll put them back. So if you guys remember what the topic was when we were looking at, Bitcoin last time, was saying, okay, if we could sustain above this level here at 21.7, that'd be a good sign of us being able to, have a little bit of a rally. But if we could not, and if we come back down within range and we start testing this 21-day EMA, right, then that means there's a less likelihood of us having a rally. And so we went ahead and we bounced off of that level we've been coming down. Now, the next level to start paying attention to the downside, right, is this level here, 18,700. And then so the interesting part is this 21-day EMA is serving as support. And so today we wicked below it, but now price is getting established above it. So the question is, as the days go by, and then this is going to be very easy to really see, is if we start to break this 21-day EMA with the candle bodies, there's a good chance that we do come down to this level here. And so, because as we all know, right, when we don't sustain this 21-day EMA, what does that mean? There's more bearishness in the future. Now, the drop may not be as drastic as this, but every time that we've kind of even wicked above it, right? So we wicked above it a couple times, or not going to say which, we had a few days of candle bodies above it. So just like this chunk here. And then if we want to kind of take a look here, and we had a couple weeks, right? So even here, right here, and this one was looking pretty promising right here. That stretch was looking pretty promising, but we got knocked down by the 200-day moving average. So on the resistance, right, to the upside, we're going to be looking to break this to say, okay, we may be back in bull mode, right, if we are able to break this 200-day moving average. So understanding how these moving averages serve as resistance and support at different times is very important. So in a bear run, looking to get above that 200-day is very important. So if y'all want to write that down, I would highly suggest so if you want to be serious about understanding crypto in this way. And then so, yeah, we've had time where we've wicked above it right here, here, and here. But nonetheless, where we're at again, we come above it with a few candle bodies. But if we cannot sustain that, expect price action to go below it. And so that's kind of where we're at. So we're going to see over the next, I would say over the next 3 or 4 days, and especially on Wednesday, since we have that CPI print coming up here, I would see some type of volatility. Now, the interesting thing is, uh, you know, this is not a coincidence either, because as you can see, I have this parallel channel popped on here. And so for the parallel channel, I like using these because it really gets us to get a good visual of what's really happening within a tight frame. And so for the tight frame of this downtrend that we've been in since November, we can really get a chance to look at, okay, well, what does price do? And then so as you can see, this is a parallel channel from bottom to top, essentially meaning things work in parallels essentially. And so this midline has always been, I'm always talking about this midline every time I talk about a parallel channel, because it really serves as a point of decision essentially. And so same thing, we've seen this midline serve as a point of turnaround. Like we had a couple days where we've gotten a couple candle bodies over it, but it was a point of turnaround here, resistance here, here, right? And then same way, we just played. That's why I said this point was pretty confusing for some, because we just threaded the 21-day EMA, but we even threaded this midline and we kind of just played with it. Then same, but what happened? We did a round trip going from bottom to the top. And then so if you were to kind of like cut it in half, right? Cut it in half. This first half of this bear market was spent below the midline. Then, right, this portion here was spent above it, because we use it, we tap the top, and then we use it as support here and at these points here as well. So these parallel channels are very, very helpful. And then same thing here. If we want to extrapolate this out, and that's why I had the dotted line, because if we want to extrapolate this out, this midline, we hit right on it. So boom, there we go. And we're going to go ahead and turn that into a dotted line. And let's turn that red. So same thing here. This midline, guess what? Served as resistance once again. So now that we've had a good portion of time being on the top of this channel, but yet still in the downtrend, what can we kind of start to put together? We can kind of start to put together that we're going to potentially start simmering within this lower region of this channel. And so same thing here. We just want to bring this channel out and just pull it out. And we can get an idea. And until this channel breaks, then we'll have to adjust from there. But as of right now, this is kind of what's going on. So as the data comes through, we just continue to use it. And then so let's kind of pull that out to where the channel still lined up. So you can see that this channel is very useful because you have the touch point there, there on the wicks, and you have the touch points here, here at the top, and everything's parallel. So the thing is, like I said, this portion here of where we had price action kind of stop out right there. Let's see if we can hold that. But like I said, us being where this 21-day EMA is, and we're crossing below it, it looks like, and we got rejected off of this midline, hints of the probability going to the downside here, especially with this big week coming up with some things as far as reports and things like that. So yeah, I'm just gonna just be on the lookout, and I think we may have some deals coming in, especially if you're looking at things on a a monthly or a 60-day cycle basis or even a quarterly basis, right? To be able to scoop up something on the cheap. And so, and this is all a game of accumulation. And so that's the thing. Now, is that saying the bottom is in? I'm not going to say that. There's no way of knowing. You don't know a bottom is in until after the fact. I just know where value is. And so nonetheless, for me personally, Ethereum under $1,000 is value. Bitcoin, especially, so if we kind of pull this over, Bitcoin under, right? 18,000, right? Because if we go and we make a new low, right? Because we had a low sitting right there about like 17,000 change. I know Bitcoin under 18,000 for me is value. And so another thing to pay attention to of why I say there's probably going to be a little bit more downtrend coming in here, because same thing. If you kind of look at this RSI, what have we seen? We've had this midline here with the RSI, and we've used it as resistance. And so we use that resistance all along here with relative strength a couple times, 1, 2, 3, 4, and for a fifth time, we've been rejected. And then so typically, right? So let's blow that up. So typically when we've been rejected, so right here, rejected here, here, and we didn't get all the way up there, but nonetheless, right, we're coming back down every time that we've been rejected or we got close and didn't go above it. What did we do? We came down and we test the bottom of the RSI metric, and we didn't just, kind of touch it. We went well below the bottom. And so this is just taking recent history, right? Recent information and applying to probability. Not saying this is going to happen, but probability is a thing to pay attention to, especially when you're looking at charts. And so, and we're going to see. And so the big point is if we start to see, right, we start to see this moving average here get crossed with the metric, then that means there's more credence of this potentially coming back down here, retesting, or maybe even going a little bit lower and then coming back up. And so, and this is not fit to exact date, but just, getting a visual of what we could potentially see. And as we can see, right, overall, where has the majority of the price been, right? The price has been since April on the lower part of this RSI metric. We have not been able to, on the daily, we have not been able to, have a really good bullish portion to where things are looking great on any type of rebound since April. And so that's quite a bit of time. And then so I'd say we may have one more tap before we can even think of a somewhat of a rally. We had a little baby rally, but this is nothing really significant to get out of bed for. So so y'all can see my doodles and my drawing, but I hope that was a little bit of a visual representation on what's going on here on the daily as far as the RSI goes. So now that we can pop out of that, and nonetheless, like I said, we are in this channel. So let's kind of clean this up, and we'll kind of dive into some different aspects to slice this apple. I'm hoping that y'all are really, really stacking up that cash, really getting a good position with your cash flow, right? Because the people that can take advantage, especially when there's discounts like this on good assets, these are the people that do really, really well long term when it comes to investing. And so I do want to bring up a couple other support levels that I think that we still have, and we'll pop back over to the weekly chart and just take a look at a couple things there. So let's clean this up. So we got the idea here. We're in this parallel channel. We'll probably have a good chance at breaking this 21-day EMA, going downwards, and we'll see if we break this level here at about 28 or I'm sorry, 18.7, and see if we make a new low, or if that low was in, and maybe we just form maybe a triple bottom and then we rebound up. But nonetheless, I do think there's a good chance that we'll pop back below that 19K range. So we'll see that as the data comes through. Now let's go back to the weekly. So what we were talking about here, we were talking about, this aspect of, this 200-week moving average as somewhat of a support in bear markets. And as we can see, we penetrated that. But now what did it show recently? So let's remove this parallel channel. And as we can see, what it showed recently, right, is that it was a little bit of a resistance. And so if y'all can see that, we wicked up to it, but we could not close above it last week. And then so as we get started this week, we're already kind of forming a red candle. And like I said, just lay the puzzle pieces out in front of you. And we got a tough week ahead of us, especially if CPI is going to be higher than what it was last week, or even if it's the same. And so with that being said, right, there is a little bit more credence to say, okay, well, the likelihood of us breaking it. So if we were to kind of, pull that out, like what we would need to first and foremost see, right, is for us, and that kind of lines up, right, with the higher portion of this 21.7 range. But for us to really say, okay, we're really getting maybe the ball rolling a little bit, we would really need to break this 200-week moving average, and it's not going to be resistance anymore for us to have a really a sustained rally that's worth saying, okay, hey, I want to potentially maybe dive in and capture that rally on maybe a swing trade, which it does take a little bit more skill to see that. And so, but the biggest thing too, the biggest two things that we can see for us to say, hey, we're going to have a sustained rally for, like the long term, and this is maybe projecting out maybe later this year or sometime in 2023, is when we not only break this 200-week moving average, but we also break this 21-week EMA as well. And then that will be just like the beginning. And then, like I said, also breaking that 200-day moving average. I know it's a lot of numbers, but hopefully y'all can kind of track with what I'm saying. And so, and same thing here. If we look at the RSI and we kind of use this as a barometer of just overall strength for, BTC and thus crypto, what can we see? It's very interesting, right? Because we've started to kind of flatten out and curl up, right, on the RSI. So as we can see, we flattened out and then we've kind of curled up. Now, who's to say that we can't kind of come back down? We don't know, right? But nonetheless, like I said, understanding value anytime in Bitcoin's life and its history, anytime that you've been able to purchase BTC at or below 30 on the RSI, to date, it's been a great buying opportunity. And so, that's just something that we'll continue to pay attention to. And yes, we are touching uncharted waters since 2011 with the RSI tapping about 25 earlier in late June. So not too long ago, about a couple weeks ago. So, we'll continue to track this, but nonetheless, you know, everyone has to make a decision. Are they serious about crypto or are they not? Are they playing a game of fear? And has the fear got to them so much that they are in analysis paralysis and not taking any action? If your action is not buying, then the next action should be, hey, I'm formulating a plan. So that's why I'm here to show you guys these things and help you guys formulate your plan. So that's BTC in a nutshell, right? And then if we kind of want to throw a few things on there, we'll look at the Bollinger Bands to get an idea of immediate price action and the probability of where we can go as well for another confirmation. And then we'll throw some Fibonacci levels on there and retracements as well, because I want to show you how these Fibonacci levels line up where volume is. And so same thing here. If we were to kind of look at the Bollinger Bands, anytime that we sustain and we continue to attack the bottom of this Bollinger Band, that's just letting we're in bear mode, and vice versa. When we're attacking the top of a Bollinger Band, we're in bull mode. And so, as we can see, there was that transition from going from the top, right, to lagging towards the bottom. And so what we want to see to say, okay, well, hey, are we forming a basin, right? Is let's take a look at previous bear markets. So when you're in a trend that's going down, what do we see? So if we take this bear market, you've seen how things go from wide and they get tightened. They get tightened up quite a bit. And as you see, it starts to attack. You start to see the flattening. So it starts to attack the bottom of the Bollinger Band, and then it deviates and it flattens away from it. But what do you see simultaneously? You see the top converge down, right? So that's another way of looking at this, of saying, okay, well, is the bottom starting to form, or maybe are we starting to get to the end of an accumulation zone? Is when you see this deviation from the bottom of this Bollinger Band, and we're looking at the weekly, and you see the top start to curl over and get closer to it, right? And that's after a long downtrend. And then so same thing here, right? Price came down and it deviated from it. Now I would say this was not so much of a bear market, but this is bearish pricing. But if we can kind of look a little bit further down, let's see if we can go to another cycle and just see the anatomy of, you know, that bull to bear, right? So same thing, bull attacking. I mean, this is straight up. My goodness, like being involved in crypto during what this span of a couple months, you were on a high that probably most people couldn't explain financially, because not as many people are invested during this time. But nonetheless, getting a nice 7x on your capital in the span of a couple months, that's nice, right? And so same thing going from bull to bear. You're straddling, really, touching points on the bottom of this Bollinger Band. And then same thing, you deviate from the bottom, and then you see it get nice and tight, and you see the top really start to converge down on it and get close, until now you see the transfer to where now it's bouncing off the top. And then so that's how you can really see the difference between a bull and a bear run, is utilizing these Bollinger Bands to your benefit, and say, okay, well, where are the most touch points? Is it touching the bottom majority of the time? Okay, probably in the bearish mode. Is it touching the top? So you see these multiple touch points. And so, like, for example, if you were looking to invest by here, you see a touch point here: 1, 2, 3, 4. But I mean, like, for sure by this point, you would have known, okay, this is somewhat of a bearish run. And also same thing, this 21-week EMA served as support the whole time. So that's how you put all this information together to really understand what's going on with the price action. And so once again, as we kind of fast forward to where we are now, and as we can see, same thing below that 21-week EMA, and we've been attacking this bottom of this Bollinger Band, and we're kind of deviating. But the biggest thing is we have not seen this curl over and start to attack and come down to kind of verify, that, okay, yeah, we're going to be in a sustained, from this aspect for this metric, right? I think we have a lot of other verifications to show that we are in a bear market, but for this one in particular, we want to see this also curl over and start to get tight, right? And as price action comes through, this is going to deviate, and you're going to really see the top of this Bollinger Band. And if I can kind of draw this out, you're going to really start to see the top of this Bollinger Band start to really curl over and start to attack where the price is pretty heavy. And then that's what we really want to see to say, okay, now we're starting to form a bottom, so to speak. And so, yeah, there's still a little bit of time to go. Like I said, we're going to be patient and we're just going to kind of see. But nonetheless, like I said, understanding value is really important. And so that's BTC. And one last thing is what I'll do, and to give us another idea of different levels of where we could see it on the downside potentially, is we're going to grab our trusty dusty Fibonacci retracement. We're going to go from the bottom, take it up to the top of where price action was at 69K, and just get an idea of what things are looking like. And so let me make sure these settings are correct. And then so we want to base them just on normal scale. And so what do? We came and we tapped this 0.786 level right here on this wick, and we're kind of straddling above it. And so, that's interesting to kind of think about, because this normally serves as, from this move, right? So from this move from here to here, there's basically a 78% drawback from this point to this point. Now, if we kind of pull this all the way to this low, to where the cycle essentially started from this bottom, right? You see that kind of lines up pretty dang perfect. But nonetheless, right, the way that I like to look at it from, there's still always the capability of coming down to this next field level of that 85% retracement from the cycle move, right? And so where does that line us up? So if we were to kind of, put a little indicator there, little marker, that's going to give us right there like that 12,700 range, give or take. And then so same thing, right? If we remember our different levels of where the volume is, and so let's kind of bring up our levels of support. Let's see here, major support. So if you kind of remember, that kind of coexist with where volume is as well. And then so same thing here. There's a little bit of chunk of volume here at that 16,008. But then really the next amount of volume of where a lot of people transfer the Bitcoin, either buying or selling, a lot of action, people willing to step into this market, was right around this 12 and 13K range. And we could see that not only just once, right, but we can see it multiple times. So we can see that here. Oh, let's try to get that right. So we can see that here, and we can see that here. And so same thing here. If we want to pop on the volume profile, and let's kind of clean this up so it's a little bit easier to see. You can take these moving averages out the way for now. So as we can see with the volume profile, see that ledge? There's a big old ledge right here. So in between this area of, I would say majority of it would be right here in that $12,000 range. And then let's bring all the price data up from recent history. And there you go. So that's the ledge that we're, saying, hey, like this area here is, pretty strong, of where through time people have exchanged their Bitcoin, willing to come to this market and become a buyer during that time, or just in general, just price action has spent a lot of time here. And so, yeah, like, that's kind of where things are at. And so on the upside, for things to get pretty bullish, vice versa, what do we want to see? We want to start seeing these price targets literally just get taken up, day by day, week by week, through time over, the next year or two. So yeah, at some point, yeah, we want to make sure that we're getting over that 21.7 range. And then the next portion is, okay, cool, we're going to want to go ahead and attack that 32K range. And then really, right, if we can, because here's the thing, right? During this shuffle right here, this 50K range is kind of like that median line. And then we got rejected right here specifically. And then so, the level that we want to say, okay, it's time to really start attacking those all-time highs on the next uptrend, right, is when we get above that 50K. And so, that's kind of what we're looking at. But this is long-term projection. As time goes on, we'll see, and I'm going to keep these on here because I'm going to be, guess what, guys? I'm going to be here for the next 7 years, 8 years. So we're going to be able to track this stuff. And I'm saying that's at a minimum, right? We're going to be able to track this stuff and really get a great idea of, how this price action is moving And on this journey, we can always look back and say, hey, remember when price was only 18K? We're all gonna laugh and it's gonna be, 120K, right? And so whenever that may be, and it's solely because of the fundamentals behind why Bitcoin can even do that, and thus the rest of crypto. And so, I think I did a decent job of diving into Bitcoin. This is just a couple ways I like to slice the apple. I do a little bit more technical stuff, but we're just gonna keep it nice and light here, for now. And so, as of that, let's kind of jump into Ethereum really quickly. And typically, the Ethereum chart is going to look pretty similar to the Bitcoin chart. But from a fundamental standpoint, Ethereum has some other things to offer that Bitcoin doesn't, right? Mainly its smart contract capability and a little bit more scalable. So, same thing here as, if we kind of talk about what we were talking about last time, these levels here. So, for us to be bullish, we need to get above that 1200 range. And then obviously on the downside, right? We can expect further downside, especially if we get below these areas, these candle bodies. So that's going to be right around that $1,050 range. And so let's put a price target there just so we can remember that. And so as we kind of, Ethereum has been holding up decently and it's kind of just in this range. Let's kind of dive in a little bit closer on the daily. And I mean, yeah, this looks very similar to Bitcoin with the double top. Now, here is a somewhat of a triangle. Now, the question is, and here's a key thing, right? If we've had two attacks at the ascending triangle, now if we come and we break through on this third time, I mean, I'm not going to say most definitely or indefinitely, but there's a higher probability that we go ahead and we really attack lower lows here, especially if we've already tried to break this triangle to the upside, but we didn't. So we've tried that two times, but we failed to do so. And then so the interesting thing is, as the price data comes through, we start breaking through this level here. And then so if we were to put a price call here over the next day or two, we start to break below that 1100 range. You want to maybe get in your head to say, okay, I want to prepare myself to get ready to potentially see $1,000 Ethereum. And so for, like I said, for me personally, I am an accumulator at Ethereum, anything $1,000 or less. And that's me personally. And you guys can decide to do what you want to do on, your own theology, right? And so, nonetheless, I just know where Ethereum is going to be 3, 4, 5 years from now, and I can guarantee you it's not going to be $1,000. And so that is something that I'm comfortable saying here. That is a higher probability of happening. So, with that being said, we'll continue to watch this triangle here. But the biggest thing for Ethereum is to the upside, right? And so one thing I didn't do with Bitcoin, because I personally am an accumulator of Ethereum more than Bitcoin. I do accumulate both during these bear trends. But one thing that I like to do is get an idea of what things look like to the upside and the capability to the upside. Because we did all that grunt work for, okay, well, what do things potentially look like for the downside for Bitcoin? And as we can see, because you can look at the volume profile while we're just looking at it, there's a lot of people that are coming in and stepping in and, either buying Ethereum in this range or back here at this time. This is a point to where a lot of people it was exchanging hands. And then so that next level of support for Ethereum, because there's a little bit of a little crater here, and that next ledge is going to be right here at that $700 Ethereum. So same thing, developing a plan. Are you saying, okay, cool, I'm willing to nibble at, for example, are you willing to nibble at Ethereum at 1100, 1000, and then set a limit order at 700? That's how you DCA into a market instead of saying, okay, hey, I just want to put all my money in at this one point. You got to reserve some for price to go lower. That's how you really, really capture lower prices if they happen. And that's a big if. And why you want to be able to buy some within value, because there's no guarantee that it will go lower, right? But we're going to use all the metrics to say probability is, hey, potentially this is kind of what it's looking like. And then so same thing here. Let's kind of do we'll do a line here and just to let us know. So I'll bring it from over here. And so we'll let us know that, it looks from where the volume profile is kind of showing us. We got that support and it's kind of moving around on us. But I'd say, anywhere between like that 700 and that $750 range. And so we'll put the price call here. And then so for myself, this is what I'll be doing because this is how I do my data and my research, right? I'll say, okay, well, where are we at? Where's the probability going? Okay, are we looking like we're coming into a local low for the time period? I'll nibble, 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 and then I'll go ahead and put a limit order on assets that I know I want to hold long term, especially if we have, like bearishness, like how this was, right? So this point where it's just like 3 or 4 days of just crazy bearishness that nobody expected. Yeah, I want to be able to capture all that, capture all of these lows. And so this is the next level of where I'm saying I'm willing to be a buyer for Ethereum. So now that we kind of got that out the way, we've kind of looked at where things could go, on the downside. And then, if we want to pop in some moving averages here. So same thing here. We got rejected off the 200-day moving average. And for us to sustain a bull run, we need to be above this 200-day moving average. And then so as we can see, we're nowhere near close to that. And so definitely within the next month or so, I don't see that happening to where things are just going to pop off into bullish mode. And I mean, you never know, but the probability of saying, hey, we're either going to potentially be going sideways, maybe a small rally, either going to be, sideways or lower is kind of what things are looking like. Because you can see the trajectory of this moving average where it's coming closer to price pretty heavily, and price is just going sideways. So this is being attracted to price. And so, that's a big thing to realize and understand. But here's one thing. Shout out to Charlie, Cultivate Crypto. I'm going to get this algo out and see, are we seeing anything on the algo? So let's go back over to the weekly because the weekly is, pretty good, pretty helpful. And we'll see, do we have a buy or a sell setup or anything? And, and the biggest thing is if there's no buy setup, then you can add a little bit more to your assessment that's, yeah, like, price could potentially trend a little bit lower. And so as we kind of dive in, we look at it, right? There's no buy setup. So we did have a buy setup here, but we do not have another buy setup. And we have not had a confirmation with the diamond for us to say, hey, the algo is saying there's a good chance that we'll be heading higher. So the last time that we got that, we did. So we had the setup and the diamond. So we did have some positive price action. So for this candle here, that was pretty sweet. That was a nice 20% gain. And especially here, we had the setup. And then we also had the confirmation, right? And then boom, that 40% gain for those, few weeks, which is pretty good. But vice versa, there's a clear indication from the algo, right? Square, diamond on the sell side. And then so, using a lot of metrics can really help you, especially if you did not see this coming. Well, this algo did. So just give you a little bit of a little bit of a thought to say, hey, maybe going to purchase the algo over at cultivatecrypto.com may be beneficial for you. It may not be, but all I can say is it called this one pretty dang accurately. So that's that. But nonetheless, as we see here, personally, we do not have a buy signal saying, yeah, there's no bullishness in sight according to the algo. And so we'll leave that at that. So now let's talk a little bit more about like long term. Like where could we see things going long term? And same thing, the Ethereum chart looks really good, just like Bitcoin. And same thing with the RSI, we see this curling up. And then so as you can see, price has been a little bit more to sideways. And we'll see, especially like this next month or two, we see more sideways action. That may be a sign to say, okay, things are, settling. Not saying that a bottom is in, but things are settling. And settling, I would say that's more confidence inspiring than just straight down, right? And that's what we've been seeing, like I said, since April for a lot of these alts is just straight down. And obviously, Ethereum is on heavy discount as well. So from the top to the bottom, so where we are right now, it's on a 74% discount, about 76 actually, but to where that wick came down and went down on discount about 81%. And then so what I want to do is talk a little bit and help us understand that there is a big difference between, even 80 and 90%, because for these alts, we do know that they can retrace 90, 95%. So Ethereum, just sitting right about 75%, and it came down to 80%. But the difference between 80% and 90% is quite large, right? And then so just like I said, trying to throw all your money in right here would be ill advisement. And I'm not trying to advise you guys on how to do things, just trying to talk strategy here. Just because, yeah, going down 10%, an additional 10 percent would, take you from, okay, being a buyer at 1100, and let's kind of go down to where that 90% is 90% retracements, and that's at about $450. And so the thing is, you can basically accumulate 3 times more coins, and that's only a 10% difference. So if you guys see how that math works, that's why dollar cost averaging is so important, because no one can predict where price is going to go. I'm not saying it'll even go this low. It potentially could, it could not. But nonetheless, you do not want to just say, hey, I missed out on an opportunity because I was too gun-ho. And that's the thing. This is kind of one of the areas where you kind of got to straddle the fence and play a little bit of both sides, depending on where the majority of your conviction lies. And so what I mean by that is, like, if you have a little bit more conviction saying, hey, things could probably go a little bit lower, right? Then you probably want to, save majority of your money for those lower portions. But nonetheless, like I said, play both sides, but you nibble where we're at now. Vice versa, if you don't think we're going to go much lower, then you're probably accumulating pretty heavy, and you're going to save just a little bit, just in case, like a Hail Mary buy order for if it does maybe go down another 15-20%. But with that being said, right, this, like I said, in this zone, there's value here and below regardless. So for the long term, you know, it's really, I would say it's really tit for tat. In the long term, all of this stuff ends up being pretty value, like I said, 3, 4, 5 years from now. And so same thing, let's do a fib retracement from the wick for COVID and take that to the top. And so the interesting thing is, right, yeah, these candle bodies are right here at this 0.786, and we've wicked below it. But what do we know, right? These things line up pretty well. So where this 0.854 retracement is right where we kind of, drew that next major support here at about, a little bit less than $700. And so, that's something to really pay attention to and kind of utilize in your toolbox to, like I said, be in front of what's going on. That way you're prepared to take action in the way that you may choose to do so. And so, that's pretty interesting. But now to the upside, I always like looking at this as well. And so we'll do the short term and then we'll do long term. So vice versa, we can also look and see, okay, well, what do things look like, potentially to the upside? And then, so for example, right, if you see, okay, this was a major resistance, and this is kind of what knocked us out of everyone thinking that we might be in a bull market. And since then, it's been kind of clear that we've been in a bear market, but now we've kind of come sideways. We could also invert this fib retracement and take it to the upside. So let's say the low may be in, and it may go lower, but nonetheless, let's say the low was here with that wick that came down. So we had Ethereum wick all the way down to about $893. And I got the receipts. I was able to capture, some Ethereum right there at about like $898. So like I said, I knew where my levels were, and I had that limit order ready to go. And so, I was able to get a little bit of that wick. But same way on the way up, right? What do we want to see? We want to see this. So let's take this volume profile out the way for now. So on the way up, on the ascent, what do we want to see? We want to see Ethereum start to break these levels and then use them as support. So we want to see it on the way up, break that $1,500 range, right? We want to see it on the way up, break that golden ratio, especially here at this $2,500 range. And then same thing here. This level is very huge because was like one of the major rejections, right? This is, what we could be seeing when we're back in bull mode, is eclipsing this part, right? But then also what? Going to attack all-time highs. Because if you notice, this major rejection lines up pretty dang well with the all-time highs, right? And then, so that's sitting right there about 5,000. And so through time, right? This is what we want to look at long term. We want to take this to the all-time high, and this is what we could be looking like at years down the line. And so years down the line, and that's saying as if this may be the low and it could go lower, but as of right now, if we were project risk to return, right, there is a good risk that we do come down to this portion here, right? And this is like through time. So there's a chance that you may be down 40% on your position. Well, in crypto, right? This is something that everybody basically goes through. You're going to see your portfolio swing 20, 30, 40, 50%, especially if you're holding through time, right? Not everyone's going to be able to snipe the low all the time. And I don't think everybody should try to do that. But you do want to take advantage when the lows do come. I do want to say that. But to the upside, what is the potential, right? To the upside, if you're a buyer today, and we're just going to take it basic right to that next level, right to that next level of the 1.6. And as we know, in a bull run, these Fibonacci levels really get eclipsed and really get taken out one by one to the upside, especially in a bull run. But on the conservative side, you're looking at a 5x from these price levels here. And so that's not bad. And then, when things are really bullish, especially during a full on bull run, you can take it to the top of this. And so for Ethereum, of why I say, Ethereum's a little bit of a larger cap that is sound within its network effect. And so it's got a lot of staying power. There's still a 15x in its price, and that's through time. So are you willing to wait 2, 3, 4 years for a 15x on your capital? And the thing is, I am and I'm hoping you guys are too, because there's not much, hardly anything that can give you that rate of return in that short of a time span. And then the question you may ask, like, I don't know. I don't know if I believe that. Can that really happen in, 2, 3, 4 years, 5 years? And the answer is yes. It's been happening for Ethereum, right? And so we can go back and just look at time. So we can go ahead, put that on the weekly, and we can probably count multiple times where the price has 15x. And so you can choose any point to where it's settled. And so what I did here, I kind of, drew these white lines to show you, okay, well, here's, where value is, right? So value is, so here's lows, right? Those are nice to always get, but value is kind of when you see price settle before a major bull run. And then, so for example, right, you can just, kind of take this price range. And let's say you bought anywhere within this value. Let's say you bought the tip of this value, right? But then you take it, and you don't even have to go to the tip top peak, right? You just go to the one right here. So when RSI really topped out and you start to see it come back down, that's a 30x. And then the question is, well, how long did that take? And this is what happens to coins that have use case, that have staying power, and they're a part of bull runs. This is where the gains come from. This is where people understand in crypto how the money is made. And some people, they don't know anything, but they just bought something because their friend told them. And yeah, they made some money too, but they did it out of speculation, not from really knowing what's going on. Here, we're going to know what's going on. And so, with that being said, and that's just, to that first peak. And then so you maybe de-risk yourself, right? But then you keep some in the investment, and some of your investment had an opportunity to get an 100x, right? And so that's just the power of crypto. And that was, part of its first cycle back in 2016, 2017. But even in this recent cycle here, and you want to take this value range, right? You don't even have to get the exact bottom. Let's choose the middle right there. The same thing, right? Boom, to that tip top, 30x. And then so, yes, diminishing returns are still part of the game, but now 15x doesn't sound so crazy, right? Because we've already seen it do a 30x, we've seen it do a 100x. So 15x over a span of, like I said, 2, 3, 4 years, it's really not that crazy. And then so you decide the dollar amount, right? You decide the dollar amount, and you decide if you have conviction within this asset class. And then the people who have the conviction and put their money where their mouth is, those are the people that get the reward, versus the people that said, oh man, I wish, or oh man, I was going to, or all this other stuff, all these excuses that people have of why they don't invest in crypto. Or let's just be honest, most people don't understand it, and most people are scared. And so that's the thing. You limit those things by learning, and learning breeds confidence. And then so that's the biggest thing that I'm going to continue to be passionate about here because I'm super passionate about this stuff because I know what it's done for me. And I just want other people to realize the capability of what it can do for them. Right. And so, but as we know, this is a journey. It's not an easy one. But just in general, what in life worth having is easy. And that's where people get all messed up because they just think, oh, well, yeah, like I said, in crypto, it's just expansive enough and explosive enough to where even people who don't know anything can get real lucky and just be part of a bull run and make a lot of money. But if you want to be an investor is a person that understands investing through time, and these are the people that typically don't just do well for a year or two, these are the people that do well over spans of 10, 20, 30 years. And this is how you really write your ticket. This is how you write your ticket to the future that you want to have, honestly. But we see it's tough out here. Like finances are a thing that people do not pay attention to. And therefore, they're stuck with that knowledge base. And unfortunately, due to their lack of understanding what different aspects of finance are, right? Budgeting, right? Cash flow, investing, all these things, they kind of, unfortunately, they kind of get left behind in certain ways, right? But nonetheless, you can still live a great life. But all I'm saying is you can optimize your finances by just learning more about it. So that's Ethereum, right? So that's the value proposition there. Let's jump over to ADA, Cardano. Let's see here. Da-da-da. Is there a bit stamp? See if we can get the full chart here. Okay, that's not giving us the full chart. No, let's go here. Okay. Let's try this one. Okay, that's a little better. Cool. And so same thing here for me. I was able like I was able to see this is a clear five wave impulse, one, two, three, four, truncated fifth, right? And then so this downtrend is kind of in the middle portion of this wave three. And so ADA is on a nice discount. So let's update this chart here. Let's get rid of that. And interesting thing is, I had this line here for a reason because we've been slowly consolidating towards this line. But as of today, from the top, ADA is on a 84% discount. And so if you believe in what Charles Hoskins is doing, if you understand maybe some of the features, some of the code behind Cardano, some of the things that they are trying to attack that's unique within the space, you may say, hey, I want to accumulate Cardano. And so we do know Cardano had a crazy, I'm not going to say crazy because within crypto, I'm not going to consider any crazy or any price fluctuation as crazy. This is just normal, right? We got to just start seeing these major uptrends and major downtrends as just normal. It's a young asset class. There's going to be volatility. So, but same thing here. I mean, for the people who were investing, and this is if you timed it perfect, which no one does, but if you were to time it perfect from peak to trough, you would have got a nice 164x on your money. And during that time span, right? I mean, same thing. When things are bullish, they get bullish real quick. And so that took some time, about a year and 3/4, so almost 2 years. But nonetheless, would you be willing to be in a market that can give you this capability? I sure am. And so, with that being said, let's kind of see, okay, well, how far have we retraced from this point? And we'll go from the wick. And so, the interesting thing of why we're settling here, because, right, look at this. And I know a lot of people don't use this Fibonacci number, but it is a Fibonacci number here at 0.854, right? And as you can see, price has been settling, wicking down, but settling here. And here's the thing, it could get pretty hairy, right? If BTC starts to attack, 16, 17K, 15K, because there's not much volume, right? And I believe this is the full chart. It may not be, but just going off of this chart, we'll look at the amount of volume, and we had a peak here. So, but the next level of where things could go, right, is this point here. And so same thing, you've got a peak here, you've got a little cluster of price action here. And so, If Bitcoin takes a dive, best believe so is Zeta and all these other altcoins. And then this is how they get to that point to where they do retrace 90, 95%. Because as you can see, there's a big difference between 84% and there you go, 94%. And so right there, from the point of where it is now, if you were just doing all of your capital right here, right now, yeah, you expose yourself to a little bit more volatility. And you could still see 65% volatility to the downside, right? And so with that being said, just kind of pick your spots, nibble, nibble, nibble on stuff that you like. No need to go crazy, but then have a good portion of capital ready for the probability, right? And so as of right now, the probability is leaning towards, yeah, we may be going a little bit lower. And so there we go. Now, with that being said, right, this is, pretty young in its lifetime, right? It's not as old as Bitcoin. And what are we seeing if we want to look at it from a, I guess you can say, Elliott wave perspective? We're going from primary 1, primary 2, 3, 4, 5, and then so boom. So let's change that to primary. And then so as you can see, we got a clean 5 wave, 1, 2, 3, 4, 5, tier 1, down to 2, wherever 2 may be. And and 3 of 3 is the most bullish, right? And so same thing here. We'll do a long-term look of where Cardano can go. And so we'll do that, right? We'll invert this, and let's say we have this bottom here, or let's say we bring it down to somewhere in here. So let's bring it down right here in the middle. And as we all know, right, these can be eclipsed, especially for a wave 3, but just in general, when we get bullish, whenever that may be. It may be in the middle of 2023, it may be 2024 when that happening for Bitcoin comes. But, just a couple years down the line, if you can focus, do what you need to do, 2 years goes by in a second. And so, that being said, to the upside, right, and even if we're conservative and we can compare it to Ethereum, conservatively, so Ethereum conservatively was just a 5x. Cardano is looking at almost a 10x. And then if we take it up right here to this tip top, we're looking at 26x all the way to this 4.2 level. And for Ethereum, it's only maybe looking at like a 15x. And so as we all know, right, this could very much exceed these levels in a bull run. Because like, for example, we take this peak, take it down to the lows, and what do we see, right? We see it eclipse that plus some. And so, yeah, I would say Cardano, if we want to kind of zoom in a little bit more, right? There's this area of, I would say, just be cautious. I wouldn't say there's a crazy amount of support here, maybe like some other coins. So if there's something that you like, as we see kind of price develop over this week, yeah, if something you like, take a nibble. But if not, if you're just a little bit more speculative on Cardano, then just wait, right? And if you're just like saying, hey, I just want to just maybe just capture more of a low, I don't really care too much about accumulating this particular coin, but you want some, yeah, just wait, and then we'll see if we get down to these levels of where a lot of volume is right here at about like 15 cents. So we'll do a price call for Cardano saying, hey, if we cannot sustain this level here, see this little cluster, we cannot sustain this level, then look out below. So 15 cents, give or take, somewhere in there. Okay. And then so let's continue on. Let's look at Solana. Hey, hope y'all are liking this so far. Like and subscribe if you haven't already. Just go ahead and do that so the algo can pick this up and more people can get this information that is free, right? And so let's go to Solana and let's see here. Let's go to crypto. Let's see if we can find a good chart here. Okay, that's not showing us. Oh, wow. Because if that was the chart by itself, yeah, I mean, Solana would look like death. I mean, it is going through a tough time, but that's not the full chart. Okay, let's go to Gemini. Let's see the full chart here. Nope. Let's try. FTX. Well, yeah, it should be FTX because that's Solana coin basically. There we go. That's better. Cool. And so, I've kind of got Solana plotted out, pretty briefly. And so, same thing here. It's a nice Elliott wave counts. And same thing, you see Solana start to hit that value range of where it's just flattening out. Like you see certain coins just dip, 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 and it's like they keep dipping on that trajectory. And we see some coins kind of flattening out because they've already done, majority of their dip. But from an Elliott wave perspective, right? Nice, clean, one of the easier charts to see. One, two, expensive, three, four, five. So one or two was longer. Three is shorter and more complex to five. And then your retracement, right? And then so we'll see A, B, and we'll see this C come down. And then so where we see C settling a lot of the time, right, is, where volume is. So especially as you can see from this wave 3 to 4, this triangle that formed. So there's a nice, and this is pretty volatile right here, this week right here, especially. But you see this triangle that broke to the upside. There's a lot of volume and, Solana changing hands right here at this point. And you can kind of see similar things kind of happening on a smaller scale. But nonetheless, anything in between these points. So, right, anything. So where price is today, $37. And then right here to where we've wicked down and where a good amount of this volume is, right here, $25. And then so same thing, you DCA into your conviction. So majority of your DCA, right, maybe a little bit lower, closer to this, this $25 range, and you just nibble here for a little bit. So what I mean, just for example, let's say you had, I don't know, $200 and for this month, and you're saying, I don't really know. I think price can go lower. Maybe want to save that for next month. Maybe it's just like, so that's where most of your conviction is. So maybe you just take $40, 20%, you grab some here, right? But as we can see, right, we're forming a candle that's red. And if you're paying attention to BTC, BTC looks like it's coming down. So maybe you wait a couple more days because you know about what's going on with BTC, right? Not financial advice. But, so maybe you're kind of waiting a little bit closer to this $32 range, but unless you grab something in the 30s, then, but most of your conviction is down here. And that's if we get down there, right? So that's strategy for you guys. Because I really don't think people talk enough about strategy and how they're allocating capital, which I think that's super important because when you can get a good strategy, it really helps you maximize opportunity, but also protect you from downside risk, especially if you are, right with your conviction. And so same thing, as you can see, a good amount of that volume is here in this area here in between, $55 and, $25. And then same thing here. Now, if we break below this 25, same thing as 88, look out below. But I have a hunch that there's some people, especially within this ecosystem, that are, the thing is, Solana has become a really, really strong household name, especially through this last cycle. I would say many, many more people know more about Solana, and it's not quite up there with Ethereum and Bitcoin, but Solana did a lot of, I would say, and they're still doing a lot of marketing where people are starting to recognize it compared to where it was, especially in 2020. And so, and so we'll be on the lookout for that. And so if we kind of do a fib retracement, so we'll take it from this bottom of this this move here. And as you can see, right, Solana is on even more of a discount compared to some of these other coins. And so hence, it'll probably give us a little bit better upside as well. So it's gotten all the way down to about like a 90% retracement from, the peak. And that peak was nice, man. I remember everybody, this is understand human psychology. Everybody's saying, hey, buy Solana, buy Solana, buy Solana, buy Solana, right? Clearly, right? Looking at RSI, looking at different metrics. So especially from this point. So clearly, once we got above this golden ratio, especially, things are overvalued. And this is when people scream the loudest to start buying. So you have to really learn how to get sentiment, learn how to, like I said, take some time to maybe look at some of these charts and say, when you're buying stuff, is now really the best time. So all these people are hurting because maybe they YOLO'd their whole retirement. They YOLO'd a lot of money in at this point in time. So the thing is, yeah, you can course correct. You can learn from, and I'm not even going to say it's a mistake, but you can learn from everything. So this is why if you believe in Solana long term, right, dollar cost average, bring your cost basis lower. And so you can get a crazy amount of more coins with the same dollar amount being spent. So let me say that again. So for example, right, when Solana was about 250 bucks, and let's say you were investing $1,000, you could only get what, 4 coins? Now think about how many more coins you can get now that Solana is $35, quite a bit more. And then so the thing is trying to accumulate coins. That's just the biggest key for many new people in crypto. Unfortunately, they're so worried about the dollar amount. The whole point is, especially in downtrends or like especially a bear market, you want to accumulate coins because we know through time the dollar amount gets derived from the demand of how many people want those coins that you have. So don't worry about the dollar amount, especially when you're first getting started. I know that's like super counterintuitive, but you'll see why, because you're able to hone in on what the real goal is, which is accumulating the coins that eventually through time, as we know in crypto, for the good projects that make it through bear markets and do very well through bull markets, and they're able to stay through time, the dollar amounts are higher later on. So that's the delayed gratification, and that's just investing just in general. And so, and not worrying about the dollar amount so much helps you have a little bit more solvency to not want to just panic sell because, you're not understanding quite how these things work. And so, but to the upside, same thing here. Let's go ahead and invert that fib retracement, and we'll take it from there. And as you can see, right, I kind of got it plotted out already. But yeah, I mean, 25x on Solana on a next bull run, whenever that may be. And so question is, are you willing to wait for that to happen? Because as you can see, what has happened already. And so we know diminishing returns through time, but this bull run for Solana, and so we can take it from the COVID low. So we know that was a decent point, and you can just see what kind of things happen here in crypto. Like these numbers are not fake; these things happen, right? So not as many people were invested down here. Not many people had conviction, but there's more demand that comes through time, and there's the ebbs and flows. And then so same thing here, 428x from peak to trough. Question is, how much of that do you want on the next one? So maybe it's maybe not a crazy multiple like that, but essentially, right, when things get really bullish, because if we do a fib retracement even from this top and we invert it from here to here, you can see it outpaces, right, this top of this metric of 4.2 quite often. So like I said, these are conservative things, right? 25x is not anything crazy, especially when something has done a 400x. And so, something to think about. And so I know a lot of us were expecting to get that, that last leg up and get it, really soon, and maybe just go for that 6 or that 7x that was maybe left potentially. But the Fed pivoted, right? Here's the key thing. In November, the Fed said, nope, we gotta start tightening things up. Things are getting too expansive. They shut it down. And so therefore, price is gonna follow where the most liquidity is. And there's more liquidity in the stock market. So people in the stock market get scared, and companies start to move money when they see hard times coming ahead. And so that's simple. That's why we didn't see another leg up. It's not the hardest thing to really understand. Um, and so, but the matter is, people who are paying attention could see that happening. People who are only solely worried about price going up maybe missed it. But same thing is, we all learn, and we all just do better on the next time, right? And so that's the thing about being an investor for the long term. There's still opportunity, and that's what it's all about: capturing opportunity. And so, Solana looking pretty decent. I'd say anything $30 and below, decent value, and that's my opinion. So, what else do we have on the list? I believe, let's see here. Do we have Axie Infinity? AXS. Let's go there. And so, Axie Infinity, same thing, crazy run in the last bull run. And so that was its first, because just imagine Bitcoin in its first bull run, right? High multiples on your capital. So second bull run, right? Kind of get an idea, start to frame it. What could we be looking at? But we'll do the TA here first. And then so Axie Infinity, one of crypto's, first successful games, an actual product that people could play and stuff like that. Some other games I'm actually really excited about, Illuvium being one in particular, coming up here. And I would say probably towards, maybe the end of this year or maybe next year. But, there's some things coming out that I think are going to have some incredible opportunity for use case. And so same thing here. What's the retracement looking like? Du-du-du. And same thing on a extreme discount. And so as you can see, right, kind of coming up on this peak pretty soon. So this is flattening out. So this kind of flattened out, had a rebound and came down, flattening out. And if Bitcoin is bearish, and this is bearish too. So the next level of, if you're into Axie Infinity to probably, look to scoop is right here at about $9.50. And you can see the volume is lining up because it's not a crazy amount of data because it's a relatively younger coin compared to, Bitcoin and Ethereum. But that area of volume is right here within this cluster. So right here in this range is kind of where you will probably, if anything is to be going sideways for this coin, it'll probably be within this range. So we'll kind of do that here. So in between that $9 range and that, that $4 range. And so same thing, just be patient and, let the chips fall where they may. And so this one is pretty, self-explanatory, nice and easy to see. Very expansive. And, after you do, multiples like this, right? So same thing, you don't even have to get the exact bottom, but after you do a 300x, you got to spend some time taking a breather, right? And so same thing. Now, why did it do this? Use case, and it was in the middle of a bull run. So you put those things together, and that's a theme that tends to be pretty, pretty solid within crypto. Use case, users, right? Demand, meaning the supply of coins. Price go up. Economics 101. Cool. Trying to see what else did we have in the chat. Really quick. Let's take a break. Let's go back over to the chat. Let's see here. Black Label Expat. What's going on, brother? Hope everything's well. Let's see here. What else we got in the chat? So will the 200-week moving average curl down? How long will we have to be under it for that to happen? So wait, how long will we have to be under it for that to happen? Oh, okay. So for the 200-week moving average, here, let's just take a look at it. So we'll go back over to BTC. And I'll kind of look at it in the background here while I'm talking to you guys. But that 200-week moving average, it's kind of flat right now. And so it's been mainly more of a resistance, but in previous bear runs, it's or bear cycles, it's been somewhat of a support. And then so as we see it, it's kind of curling over and going sideways. For it to curl down, price would really, really have to elevate, and I'm talking or descend to like levels of which I really don't even want to talk about. But I would say if anything, over the next 4 or 6 months, we'll see it go more so sideways and start really attacking down because it's starting off from coming down and right now it's starting to curl over. And so you need a lot of time and a lot of price action to the downside for it to actually follow and curl down as well. So, that's that. Has my mindset changed? I would say mainly my mindset's been the same, man. I've always just been like, okay, how can I accumulate coins that I, really believe in, right? So I have my core set of coins that I'm gonna be holding until I get the desired return that I want and that I know that can happen. And like I said, along the way, it's like, yeah, I take profits, right? You'd be dumb to not take profits. And so, yeah, like on a lot of coins that I had a lower cost basis, I took profits, and the money that I have in it is, more so just casino chips, right? And that's why you kind of take those profits, because guess what? You could re up. You could re up and buy more of those coins, especially when you get severe discounts. So that's kind of where I'm at right now. Is where I got capital ready to go, like just ready to let it fly. When I see, and I'm already starting to nibble. But once I kind of see these certain metrics that I'm looking at to really start to paint the picture for me, it's just reallocate, and new capital coming in as well. And same thing, we ride the wave, especially when things get pretty bullish. And so I would say my mindset is pretty similar. I've learned a lot of things along the way, and so I think we all have, especially with I think the biggest thing is seeing that companies that you really believe in, Celsius, Voyager, not your keys, not your coins. I think that's the biggest thing that anybody can learn here within crypto. And me, I never really used those platforms. I used Celsius briefly. This is back in 2020, like late 2020. I was kind of using Celsius. Maybe some other custodians like Abra, stuff like that, try to get a little bit of yield. But I never really used them for long. I mean, at most it was like 3 or 4 uh months. But at the same time, we were in full-fledged bull run. And so typically, like I say, economics 101, things get constricted. Right when you see things start to get constricted and things getting pretty bearish, you need to see, okay, well, where's my risk at? And you can take more risk when things are going well, when there's a lot of liquidity being thrown around. Yeah, you can take more risk, and there's a higher probability of that risk, maybe paying off for you. But when things kind of turn around, you got to be able to see that and say, okay, I want to decrease my risk, right? Get all my coins out. Maybe you had some coins on some contracts within DeFi. You need to assess that, say, hey, well, as you kind of see things kind of going down, things not, looking like they're panning out, you got to, protect your investment, right? So that's the part of risk mitigation. So I've always been high on risk mitigation. Um, and so for me, like I said, it's just a great reminder of not your keys, not your coins. And that's one thing that a lot of people are having to learn the hard way this time around. So let's okay, KK. So bought your first ETH at $450. There you go. Great cost basis, right? Decent. Cool. Let's see. Let's see. Cool. Thanks for the TA. Matches up well with some of my limit orders. Cool, cool, great. Glad I can help. What does a typical day look like for you? How does crypto fit in? So believe it or not, so when I'm not kind of doing some of these live streams for you guys, which I'm going to be doing more and more, crypto is a good part of my day. I guess you can consider it like the research and development time. But essentially, I'm just like anybody else, right? I go and enjoy my time with my family and friends, stuff like that. Have a couple of little hobbies here and there. But yeah, man, I spend a lot of time on these charts, a lot of time understanding different metrics, not just within crypto, but like I said, overall within different economies. And, because that's how you get a real sense of the liquidity around the world. Because since we know cryptos around the world, you want to get a good idea of, how these things are developing. And so, and I love it, man. Like, this is kind of what brings me joy and happiness, and being able to share this information with people to hopefully, if it benefits them, great. And so, yeah, like, most of my day is considered of, just kind of doing some research here and there. Obviously, buying some crypto when it's at good deals, and then just doing the different research that's required to do well here in this space. Because for me personally, I know this is a space I want to be in for a long time. So yeah, I'd say that's something I do quite often. Let's see here. Yep. If it wasn't for Greg B, I'd still have my ETH sitting in Celsius. Yeah, man. And so that's the great part about having community, right? So, we can continue to talk about things. And I'm glad, because I love reading your guys' chats, because, I'm able to see different things, learn and understand different things in a different way. And so that's the best part about having a community, especially, within an investment class, is because you can't have your eyes everywhere. And so you got other people who are all trying to do the greater good of, help everybody out. And so that's why BFD gang, what I'm saying, want to continue to build this here. And so, like I said, I'm glad that y'all have decided to, just come and even give me a chance and take a look at some of the things I have to say, because, maybe I'm not someone who's been on here for, 5, 6 years, whatever the case is. but nonetheless, I've been an investor for a long time, and so for crypto, I've just applied a lot of the methodologies that I've used with other asset classes, and all this stuff is the same. Believe it or not, just crypto's more volatile. So, cool, cool, cool. Let's see here. Is so becoming a name? Is Sam becoming a name? Yeah, I mean, same thing, man. Sam Bankman Fried. I mean, just think of the name, right? Sam Bankman Fried. Um, Typical name for a guy like that. But yeah, like as far as what FTX is doing, I mean, they had a good balance sheet, right? They understand how to operate a business versus how to chase money. I'll pause there. They understand how to operate a business instead of just how to chase money. So, for example, what was Three Arrows Capital doing? Chasing money. Celsius, to an extent, chasing money. Binance, for an extent, running a business, right? FTX running a business, and so solvency sticks around people that have good fundamentals within business. I myself, right? So that's one thing I didn't mention. So crypto for me is not necessarily my first big investment, right? I've had much bigger investments within real estate and even in the stock market. And so for real estate, same thing, right? Because I have a real estate business that I operate. Um, and I'm a little bit more passive on it now. But yeah, like same thing. What you see through time is, when you're running your systems correctly, you limit risk and you don't overexpose yourself. You overexpose yourself to things not going right when you're not thorough and when you're only just chasing money. And then so I've seen it time and time again, even within real estate, people just trying to lever themselves out, trying to maybe get a million properties on a little bit of cost basis. So like, maybe only putting just the bare minimum down payment or whatever the case may be, and they just want to get all this debt. You got to understand that there's going to be a crux. If you cannot maintain that debt, if you do not have the reserves to maintain that debt, guess what? That debt's going to kick you in the ass one day. And so people learned that, especially through 2008, 2009. But not only that, but people can just see it anytime where there's a contraction period where liquidity starts to dry up. And so yeah, like you really got to take that into consideration. And so for me, I think those companies in particularly, right? So those exchanges, but FTX and Bankman Fried, and as we know, they're highly attached to Solana just because if you just go back and you look back at the origins, there's a lot of VC capital that's there. And then, so typically venture capital, they want to protect their investments. And so they'll do dang near almost anything to make sure they succeed because, they want to get what? The butter from the duck. And so since Solana's so young, there's a lot of butter left to get. And so a lot of butter, a lot of cheese, a lot of stuff to get from that coin in particular in their eyes. So if you see that as an investor, if you can identify with that, then yes, Solana may be something you want to start to grab for the long term. Ba. Cool, cool, cool. Let's see. What did I miss? I know there's a couple other coins that we were talking about. Da-da-da. Sorry about that, guys. Technical difficulty. I'm back. Uh, cool. IOV. Okay, yeah. Let's take a look at Illuvium, and we'll kind of wrap it up after that. So let's dive back into it. So with Illuvium, Illuvium's pretty interesting because once again, it's I mean the economy behind how they're trying to run the game. A lot of the features, I'd say it has a lot of product market fit. So for Illuvium, we'll have to go to another site, CoinTrader.pro, and then so let's go here. So Gala Games and Illuvium, two, I guess you can say, metaverse type. Well, really not metaverse, just crypto gaming platforms, right? Are two that I am, pretty looking forward to seeing how things kind of roll out over the next couple, I would say, couple months to the next 6 months in particular. So let's go to Illuvium. Mm. And then, so one thing I want to do actually is really go through and make sure we're understanding how to compare things to BTC and ETH, right? Because if it's not beating Ethereum and if it's not beating Bitcoin over time, why do you have it? And so sometimes these coins, maybe they don't have a good chart compared to Bitcoin and Ethereum. Here, let's get a better chart. Let's go here. Cool. All right, so let's clean it up and then we'll go from here. So yeah, I mean, and then going on Elliott wave principle, like this primary two can come down close to where the one starts. That's within the rules. And so what does that look like? 95% retracements. And so let's do that. So yeah, as we all know, and so this one tracks pretty well with Ethereum. And the reason being is because a lot of its supply is in the liquidity pool, right? Or mixed with Ethereum. So to get the nice APR or APY for Illuvium, you got to go over to Sushi Swap and you go ahead and do half Illuvium, half Ethereum, and then you could stake it on the Illuvium platform, and it gives you a really nice APY. And if you run the numbers correctly and you do a long enough term, the APY over time will start to mitigate the risk for you to the downside. All the while, you're able to accumulate coins before this game even comes out, right? And so you have to be able to say, hey, do you think this game is going to be worth it? Do you think this game is actually going to attract users? Because I can, tell you this: if this game attracts the users that they're kind of projecting, or even half of what they're projecting, this price is going to go up, and not just by a little bit, but considerably, right? And so where are we at today? So on the downside, we have retraced from this top to the bottom. I mean, it's down there, right? So it's down 95%. And and where do we kind of see that we're kind of coming into that range of where price kind of went up, and then same thing here, got some resistance here, then broke through it. So we're right here in this area. And so kind of, what we want to see, if we start to see some sideways action or we just see it kind of break through this. But I'd say, we'll probably see a good chance of being able to pick up some cheaper, and even alluvium. I'm definitely gonna be getting my cost basis down. So like majority of my alluvium, I was able to buy probably around like 400 and whoa, guys, I low key just rugged you. Sorry. So this Wi-Fi here is a little janky, but nonetheless, we're gonna try to make do what we got, right? Let's go back to it. So we were talking about alluvium, we were kind of looking at, where things could go. Man, that's how I know you guys are riders, because you guys are still hanging, chilling, and yep, rugs. Hey, it happens to the best of us, right? It happens to the best. But like, I don't have my normal setup, guys, and so let me see if I can get this pretty decent. I don't have my normal setup. Like I said, I'm out here visiting some family and stuff like that. But nonetheless, we'll try to keep rocking and rolling. But anyways, so let me see here. Yup. Hey man, look, it happens to the best of us. If this is entertaining, hey, like the video. Like the video. Let's see. Cool. No more butter days. Low key though. What happened? Let me see. That image it froze was awesome. What did it freeze on? That's funny. I know, right? Too much butter. All right. Anyways, let's get back to it. And so we just eclipsed 2 hours for this stream. Hey, I mean, this may be the longest stream that I've done. So the fact that y'all are still here, mad respect to you guys. Really appreciate y'all showing some support. Let me continue to, like I said, add some more value here. So let's tap back into alluvium. If that's cool, let's do it. All right. So let's go back into it here. All right. So if y'all can see that, let me know. All right. So as like I was saying before we got rugged, basically we got a 94% drawdown for alluvium. So like that value zone of where price kind of came up here, and then it had a downtrend, and it went on a parabolic run. You see a lot of this price action sitting right here. So kind of take this area here and you drag that over. And so you kind of see, like I'd say, there's going to be some value opportunity coming up here for alluvium. Nonetheless, like I was mentioning before, so I primarily bought a good portion of my alluvium, here during this cluster here. And so I was accumulating here, but the thing about it is I was able to, take a good amount of profits, once I start to see this kind of come back down. So I took some profits like on the way up. So about like 1,400 bucks, I took some profits. So I didn't get the exact top, but same thing here. I took some more profits, right here. And then so for me, I had a good amount basically liquid, but then I also did a stake, right? So I did a year stake that's going to be coming out here pretty soon for alluvium back in the day. This is last September. And then so I can already tell you like the yield that I've gotten from this, just from the amount of coins, it's been a crazy amount. Like basically, I've got so many other coins that even if I would have not taken profits, I'd still be, pretty good on my position on alluvium, even though it's went on a downtrend. And then so that's why staking, if you understand that process, is super important, because it allows you to weather negative price action. And so for alluvium, like, let's kind of see where things are at from a fib retracement perspective. So we'll do that. And yeah, I mean, it's gonna have some resistance on the upside, right? So because you can kind of see this cluster. So back on the upside, right, it's gonna have some resistance at that $300 level. And so sub $100 alluvium, I mean, bring it on here, like, bring it on here. And then so, but same thing, you want to, I mean, I'm probably a little bit more patient on these lower cap altcoins, just because, like I said, if this support gets broken, and this is a relatively younger coin, anything could happen, right? Do not be surprised, because this has happened before, where even a price that you think cannot, be eclipsed to the downside, it happens in crypto. There's volatility. So just nibbling at this market, but I say the long term, nibbling at $100 alluvium, or like that $85 alluvium, is not half bad. And so let's see here. Let's see if there's a volume profile on here. Volume. I'll have volume oscillator. Price volume trend. No, that's not what I'm looking for. See here. Well, I mean, well, here's the thing. We could visually see it. There's a good amount of volume here on this cluster. And so I know they have some Bollinger Bands. So let's break out the Bollinger Bands and kind of see what the story is here. And same thing is, I mean, really almost every other coin out there is straddling the bottom part, bouncing off this lower portion of the Bollinger Band. And but here's the thing, this one seems to be getting pretty tight, kind of coming down. So starting to show like, okay, it's coming down. But if you can see, so this is let's see. Okay, so this is on the midline here is that 20-day moving average. And so it's been caught below this 20-day moving average for, I mean, like I said, really since April. So as you can see, it's kind of probably a little tough to see, but you can see this level here. Use it as resistance here, 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 and it's not even close right now. So I would say, like I said, this is going to track with Ethereum, which tracks with Bitcoin. And yeah, I mean, this is just kind of what it is in the bear market, guys. I know it's tough, but people who have been through a bear market or any time where they've had a portfolio down for a considerable amount of time, maybe it wasn't in crypto, but they can all tell you that this stuff doesn't last forever and markets trend up more than they trend down. That's why prices go up through time. So that's why Apple stock is the price of what it is today compared to what it was 3, 4, 5 years ago, 10 years ago. And because of they have a use case. So Illuvium, I think, probably one of the best looking games that I've seen within crypto, like a legitimate AAA game. And some of these other like actual real gaming platforms outside of crypto, I don't think they're up to par yet with their development. So this is going to have a little bit of a head start compared to some other platforms that may look to be jumping into the space a little bit late. Or they might be working on something and not announce it, but I would doubt that, right? They want to get a little bit of hype behind it. And so with Illuvium, yeah, so same thing here. We're below the 100-day and the 50. Obviously, let's kind of bring in some faster moving averages. So we'll look at the 12 moving average. And then so let's kind of turn that so we can see that a little bit easier color to see. Let's go green. Cool. And so same thing here. We've been getting knocked down off of this 12-day moving average. So this is a simple moving average, not an EMA. But same thing, we kind of wick above it for a few days, but ultimately we've been getting knocked down. And then so same thing, it's going to be the same story until we see significant price action to where we're getting above. So like what we want to look for is a point like this where we have multiple days sustaining above, right? That 12-day, but same thing here. Like all these moving averages are very helpful. What happened? It got knocked down by the 100-day. So what you want to see is the shorter time frame, right? These faster moving averages, you want to see them on the upside start breaking through. So breaking through the longer ones. So same thing if I were to, put, and I don't know if you guys watched that stream I did with the ribbon, so the moving average ribbon essentially. But so same thing if we were to put this moving average and turn it into the 150-day, right? So we'd want to see this break that 100-day and then continue to proceed forward to break that 150-day to, like I said, have a sustained, trend on the daily. And then you want to go and look at the weekly and see, okay, are we straddling on top of that 21-day EMA? And so as of right now, yeah, I mean, Illuvium looking pretty bearish. Nonetheless, you can kind of see, look at the volume, crazy amount of volume here, but volume's kind of been lackluster, especially, I would say since mid-June. And so, yeah, I don't see why this would be turning around anytime soon. So, yeah, I'd be a little bit more patient and just really just look at BTC and Ethereum. And if they're just kind of telling the same story, that's kind of what you're thinking about for these altcoins. And so, nonetheless, I'd probably pick a spot here. So I'll kind of look at, okay, well, there's a bulk here, a bulk here. So in the short term, I'd probably look to, maybe grab a little bit here at this level. So let's see if we can do that there. Okay, and then we'll do a price call out. So that's kind of looking, and same thing because we see it's getting knocked down off the 12-day simple moving average. Oh, that's not the price call out, but oh, they're gonna make me put it in manual. Okay, so that's looking at about like 85 bucks. And so same thing. Well, where can we go to the upside through time? So we'll do an inversion of the fib retracement. Let's take it down to this 85, and then boom, there you go. So to the upside, and for the people who are a part of the Moon Gang and are in some of the Telegram chats over there at Cultivate Crypto, you've got a little bit of inside information on just some of the ideas of what the founders. Even though if you guys thought you got rugged by me just now, man, Alluvium, Kyrian, oh man, that guy. Nonetheless, I think they got a great thing going. But as far as showing up and actually sticking through with something, yeah, I think been rugged what 3 or 4 times. So, anyways. But here are the next levels to the upside for Illuvium. If you're an investor here at this price level at 100 bucks, right? And then so same thing, just like back in the day, Ethereum used to be 100 bucks. And I mean, we could get into looking at the market caps and stuff like that, but doing a move like this is not anything crazy. Going from 85 bucks to this basic point here of about $3,000 because we already got close to $2,000. I think the tip was about 1,900, right? So a little bit less than that, about 1870. But getting to 3,000 would be an easy progression up on the next bull run, which right there you're looking at a 33x on your capital at these levels here. That's why dollar cost averaging when things retrace this month or did this much is so important because you give yourself much more opportunity for the upside gain versus if you only choose one time, you just invest one time when prices are higher. You didn't spread out your buys, and so you have a limited potential to the upside since you did not lower your cost basis. So this is an important thing because, like I said, investing is a journey. Sometimes you make the money quick, but to give yourself the best chance for a 3 to 5 year time period, you got a dollar cost average during different parts in the market, and especially take advantage of the lows, right? And so we can quantify those lows by understanding, what we're looking at here. So that's kind of alluvium right here. I mean, not too much to say about that. Besides, I think they got some decent things working in the background, and they actually, just announced their partnership with Palomos today. And so, we've been knowing that they've been trying to do some things there, and so now it's just see if they could execute their rollout plan and do it somewhat successfully. And if it's as half as successful as what I think, this price will follow the success. So pretty easy to see there. Okay. So yeah, that's what I got so far, you guys. Man, we had a nice long stream today. Cool. We got 80 you guys here in the chat. Appreciate you guys watching. Man, yeah, I know. I had a rug, but nonetheless, I put the rug back and we got back in action. So yes, sir. So I got a question for you guys. What is like one thing that you guys are looking forward to? Here, let me clean this camera. Man, I'm just basic with it. I'm not trying to be super professional here. Boom, even better. So yeah, like what are some of the things that you are looking forward to this next week? I'm kind of curious. I know some things that I'm looking forward to. I think that there's gonna be some deals out there, especially once these dates kind of start to fly by with the Fed and they start announcing different things. But yeah, like just overall, yeah, I think we're in an incredible opportunity. The people that are paying attention right now are the people that are going to get the benefit. Because I can tell you guys, most people, I can guarantee most people are not looking at this right now. They only want to pay attention when things are booming. And that's, the cardinal mistake of any investment. Like, so for example, real estate, are you only a person that wants to look to buy real estate when prices are at the all time high? Are you only a person that wants to look at, a fancy watch when they're at the all-time high? Are you willing to wait for things to get at a better buying portion? And then so the people who understand the way these markets work, the people that get the best benefit, like I said before. So um, yeah, exactly. Right. Yeah. So there's a lot of numbers coming out in July. Like this whole month is gonna be very pivotal, I think, overall, because it's like that midpoint of the year, really. And so, summer is a time where a lot of companies are looking, okay, we've had half the year already passed. We're already into Q3 and then setting their eyes on, pivoting within that Q3 and making their decisions, especially that first month of the summer to kind of position themselves for the rest of the year also. So, July has always been a big month for, asset classes across the board. So we're gonna see. And, last year we had a good July, but it's obviously a different scenario this time around. But I appreciate y'all sticking through. I promise once I get back to my normal setup, we won't have the technical difficulties like how we've had today. But no, you guys are troopers. If there's anything else that I can do for those that know how to reach me, you can reach me. Um, and we'll go from there, guys. So that's all I got. Till next time, like I said, tell a friend, tell your wife's boyfriend, tell your girlfriend's boyfriend at the channel, right? And then we'll be meeting back here. Most likely, I may do a stream this weekend, but most likely we'll be meeting back here um like later this week. So we'll see. I'll check the schedule. Try to get back on Friday, and I may do something over the weekend as well. So until then, hope y'all are well. Peace.